And this Justin also paid a crap ton for his car insurance when he first started driving. If you don't get that reference, I'm officially old. And you need to let me know in the comments below. This is very important. Please tell me you got that reference. So you're under the age of 25, you just got your car, you're finding out what insurance is, it's like double, triple the price. You're not alone. This is the common thing for teens, but don't worry, I'm here to help. So before we get into all of the questions of how much is it for my insurance, I want to buy a Dodge Charger or a Mustang GT, let's look at some of the prices and why they're so high so that we can get them cheap. You're going to want to stay tuned because I'm going to give you not only the pointers, but several companies that you need to talk to. Starting at the beginning, insurance used to be reasonable. When? Back in 1920? Probably. Like I was saying, most to all of the trends have been because of the baby. Whoa. Until now. Okay, so the boomers are hitting an age that's causing them to be a higher risk. So you mix that with the second largest group that are driving today, which is the younger generation, people that are under 25 years old. Not to offend anybody, but the age where you're a boomer, your reflexes are slower. You slow down a little bit, you mix that with the largest population coming up, they tend to have more tickets. So the younger drivers mixed with the older drivers, they drive closer, they have more tickets. You mix that with the people that have less response time, that's going to create accidents. That's what's kind of happening a little bit today, and the insurance industry is realizing that. Really? Yes. Did you know that over 50% of the 5 million yearly car crashes in the United States are caused by aggressive drivers? And that's with speeding being the most prevalent contributor to the statistic. And speed is a factor in 31% of all United States teen driving fatalities. That doesn't even include about 10 million or more crashes that are unreported each year. Bro, that's thick. I can definitely see that because Hannah and Emma both got a speeding ticket last week. But I've got a clean driving record. Why am I paying so much? Because insurance is a shared risk, it's like making a bet that you know the odds. If you knew that the average teen's favorite number is 7, you wouldn't bet on the number 9. You would always assume that everyone in that age group is going to be a 7. And then some won't, and you're going to count on that. So you'll lose a little bit, but you'll gain at the end. So what is insurance companies going to do? They're guessing the average claims that they'll be based on the age of the person. That mixed with some other rating factors, so tickets and things like that, that raises that risk. That's enough for them to profit from that. So they know that they need to be competitive, but they also need to make some money at the end of the day. Because at the end of the day, if they don't make any money, what's the point of even playing the game? There's no reason for them to be in business. Think of it this way. If it was up to the insurance company, they would insure anyone under the age of 25. The problem is large amount of their clients are age 50 and are older than that are the ones that have the teen drivers. So in order to keep their favorite clients, they have to offer discounts to keep them. That's where the safe driver came into play and all of these telematic devices. They track your driving habits. The insurance companies adapted and noticed that if they can watch the habits of the teen, it's a win-win. Not only can they better price a good driver, but if they need to remove the teen, or they call them dropping a driver or dropping the teen off of the policy, then they have proof to show mom and dad the reason why. And mom and dad are most likely going to stand behind those facts. What else can I do to get better deals? Good question. There's a ton of steps you can take. The top 5 are to take a defensive driving course. Unless you just took driver's education, if you've done that already, ignore the teen driving course. It's kind of an addition, but for the first 3 years, you're typically going to get a discount for having that. The second is to have good grades. Whenever students have good grades, they've correlated that with typically those students tend to have less driving accidents. So they're going to give you guys a discount or a reward for that. The third is to install what's called a telematics device. That's what a lot of people call Snapshot. Put this device in your car and it tracks your driving history. So if you are touching your phone, it knows that you're distracted. If you're answering text or typing in addresses for Google Maps, it knows that stuff. Now, it's not going to track your personal data and it's not going to share that information, but what it's doing is it's noticing, when are you driving? Are you driving at bad times of the day, busy times of the day? Are you going to work and back, or are you going to work, friends, home, gas station, grocery store, and then back? So they really want to know what's the risk and where you're going in those risk profiles. Keep in mind, if you cannot drive good, I do not have one of these, I will tell you, and there's reasons I'm not going to say in this video, but if you are not a great driver or you touch your cell phone a lot while you're driving, then you're not going to get a great rate. Actually, in some cases, it'll give you the opposite and give you a worse rate. That makes sure that they're going to show that you're paying attention, make sure you're not distracted, because that is the #1 cause of accidents. That does help your case if you're good there. The fourth point is to stay in your parents' policy. If they're 50 or older, they're getting a better rate because of that age. That's just the age that insurance is like. So there's a discount for that. You can still be a driver, but their credit gets passed on to your driving history, and their experience matters. So they're getting that. But B, the credit. They have home ownership sometimes. They're married. They have multiple cars. All of this stuff matters in most states, and the odds are they have that already. Why wouldn't you piggyback on that? Fifth, hide yourself on a car. So these are great things. If there are more drivers than cars, you can be a secondary on any of those vehicles, which is cheaper. Now, I'm not saying lie to your insurance company, but know that it is a lot more expensive if you're young and the primary driver on a specific car, especially if that car needs collision coverage. Okay, but last week I tried calling and everybody I called was so expensive. Which company should I even be looking at? That's the toughest part. Before I answer that, please do me a favor. If you're getting good advice, hit the subscribe button, turn on the bell icon so that you don't miss any of my fire videos I make. Although each state is different, there are so many options out there. One company that does stand out is Geico. If you haven't seen my best options for video for teens, I'll tag that here. But in the comments, you'll see that there's a lot of questions. Geico is almost always in the top 3 from when they're looking at who's going to be the best fit for me. Other companies that I would suggest would be AAA and Travelers, as well as Progressive. So those are the 4 companies that I would look at. Sometimes Nationwide is good. Bro, that's a lot of companies. I can't call that many. No worries, I would only call 3 of them. If you're not sure, I would start with Geico, I would do Travelers, and then I would do Progressive. Don't forget to let me know what companies you're calling in the comments below. You might be able to help another viewer find out if this is a good fit. I gotta go though, because I gotta go make a better joke than this just in. So yeah, I'll see you guys in the next video. Sure, at least thanks for the information. YOLO.